Something like valuations or momentum, like where does that show up in all of this?
It doesn't.
It doesn't.
And, a lot of people are, quote unquote, bothered by that. You mean you don't look at valuation or you don't look at the... So here's what I'd tell you. I think Charlie Munger said, always invert. Warren Buffett's partner said, always invert. So let's assume, here's what we know. We assume that S&P is correct in the sense when they say 85% underperform, let's just assume they're right, that they have good data and they've done their work properly. Fine. Now, this is a little bit of a leap of faith, but not much. Let's say of the several hundred managers in their database, let's assume, and I think it's a pretty good bet, that the vast majority of those managers are picking stocks and constructing portfolios by way of classic fundamental bottom-up, value investing, maybe a little macro overlay in terms of their view of the interest rates or inflation or growth. Fine. So we know that most of the vast majority underperform, and it's a pretty good bet that most of them are using the same tools, the same approach. Okay. So why would I want to do the same thing as everyone else that is leading to almost 90% of them underperforming?
So you're saying valuation doesn't matter?
It does matter. I like to say that Adam Smith always wins.
And for Adam Smith non-stans?
Like that Adam Smith who's been dead for 300 years. Yeah. In the sense that if it's a battle between, 100 of the best income statement balance sheet analysts on one side and Adam Smith on the other, he'll win every time because he knows, simple supply and demand, that they will arbitrage each other's competitive advantages away. The problem isn't that they're all trying to outperform. Seems like a worthwhile endeavor. That's not the problem per se. The problem is that they're all trying to outperform by using the same tools. And therefore, none of them can outperform.
So you've put that tool to rest.
So why would I want to do the very same thing that is leading the vast majority of managers to underperform? So back to your question, you don't look at valuations? Well, they are, but it's already in the price because they're all doing the same thing.